Hey, welcome to the stream, everyone. I'm Karma Cashflow. Today we are talking about trading, how I got into trading, what I actually do in trading to make income from. Um, Trading is not a passive income model. All right, investing is, but today we're talking about trading, and there is a difference, and we'll kind of talk about that as well. But I thought that this would be a really good topic to bring up because I have been getting a lot of questions on trading and people wanting to know more about it and so forth. This is not a trading channel, right? So if you saw this, the thumbnail, and thought that this was going to be a channel all for trading, it's not. I don't teach hardly any trading on this channel, but during this live stream, I am going to. This live stream is part of a challenge which we call LEDA, or Live Every Day in August. So for the entire month, this month in August, I am going live 7 days a week. Yes, that includes the weekends. Um, and it's going to be awesome. Um, and I've already talked about a lot of different topics. I've talked about affiliate marketing, email marketing. I've done interviews with people like Nick Nimmin uh, on building a YouTube business. We are now on the 17th day of the month, so a lot has been talked about. And I have been getting a lot of questions on trading. So I thought, hey, you know what? I will go ahead and put that out there for everybody. Talk about trading a little bit. Not going to get super duper in depth on the subject of trading, just because we just simply don't have the time, right? I have literally done classes like this master class that I used to do. Um, it's 9 sessions in total, and it took roughly about 50 hours of this masterclass to get through all the information. There's so much to learn, but we're gonna dive a little bit deep into what I do, how I do it, and I hope you enjoy. So let's get to it. All right, so before we get started, let me go ahead and welcome some people in here. Consult a blind guy, as always, bruh. Where's my little thing? Oh, there it is.
Bruh.
Just for you, my friend. Just for you. Lewis B in the house. Thank you so much for being here. Sue is here. Good morning, everybody. Oh my gosh, I got my internet back yesterday just in time to be online with Karma today. Awesome. I'm stoked about this topic. Thank you so much, Karma, for sharing your wisdom. I wouldn't call it wisdom. It's just I know a couple of things. Simply Obs in the house. Thank you so much for being here. Peasant Uprising, always a pleasure, my friend. Uh, let's see. I think Rhino Dog 34, always in the house. It is a pleasure. Thank you so much, my friend, for being here and showing me support. Uh, and oh, my son Josh is in the house. How's it going, son? That is my actual son, Josh. He lives in Florida. And by the way, Josh is coming up here in 2 days. So on Wednesday, he will be here. And maybe I'll introduce you to him before we have our interview. So um, let's talk about that real quick. Some announcements. So on Wednesday, the 19th, I will have Xenia from Xenia and Vlada House of Creators in here talking about Pinterest and how to use Pinterest for your business. All right, how to drive traffic from Pinterest to your blog or to YouTube or wherever. I have quite a few questions to ask him. Just gonna kind of pick his brain about some things, and it's gonna be awesome. Next announcement is the very day after that, on Thursday the 20th. We will have Mr. Pat Flynn in the house. All right. So I'm so super stoked about this. Wanted him to be on the show, like right from the start. Just trying to work out dates and so forth. He's a super busy man, and I'm sorry, Pat, I'm waking you up early, so that you can be on my show, because it's going to be like 6:30 in the morning that we start his time. So of course he has to wake up before that, get everything ready. I'm so sorry, Pat, but that's the time of my show. Uh, but it's going to be awesome. I am going to also pick his brain, and the topic is going to really revolve around podcasting, right? So I've had podcasts in the past. I have one now. I actually had the largest currency trading podcast in the world a few years ago, with first year downloads of over 2 million downloads, and it was awesome. But when I decided to kill the business of teaching trading, and it's funny because I'm teaching it today. Um, when I stopped the business of teaching trading, I actually took everything down, and I probably shouldn't have. And I'm gonna actually ask him about that. Um, but at the time, like podcasting for me was big because I didn't want to show my face on camera. So I figured a podcast would be better than a YouTube channel. So, but gonna pick his brain on podcasting. It's gonna be awesome. Definitely be here. Then I just put up over on my YouTube channel the live stream, so you can go to it, share it with everybody you know, to let everybody know that share both of them, Xenia's and Pat's, so that we can get a whole lot of people in to get the best uh, engagement and audience size that we could possibly have. Just sharing great information. There's no pitches or anything like that, so you don't have to worry about that. Let's see. Salima's in the house. How are you, Salima? Welcome here. You're here every day. I see that, and I love that. Thank you so much. I don't know if I welcome Peasant Uprising or not, but I saw his name here, and just wanted to say hey again if I did, because I don't remember. Um, so, couple things that was announcements. Things I worked on yesterday is a little segment that I want to just discuss what I've been working on, so that you can kind of see what I do. Um, so the other day, I actually talked about my pipeline, right, and how everything works. And I don't know if you can see this or not, but this is what I talked about the other day, where I drive traffic to my multi-page pre-sale sites, goes into my welcome campaign, and so forth. Again, don't know if you can see that or not, um, but you can go back a couple of days where I talked about uh, what was I talking about? I think I was talking about paid traffic, uh, and I actually showed this entire pipeline. So yesterday I was working on my pipeline. I built out first. I already have my uh, first angle of my multi-page pre-sale site all set up, running. That's going really, really well. I also have number two. But yesterday I wrote my third angle of my multi-page pre-sale site. Connected it up with ConvertKit. Doing all the automations. I did. Uh, Connected it up to my welcome campaign, and so forth. I actually also wrote a different email for my welcome campaign because while I was in ConvertKit, I was looking around at my analytics and saw that one of the uh, emails that is in the welcome campaign was not getting hardly any open rates. And for the open rates that were there, nobody was clicking, nobody was really reading it. So I looking at all the analytics, I decided that I need to replace that email. So I removed it, and I put in a different email. So we'll see how that goes. It's just an email that just didn't work, and I've already tried different subject lines. Just the content itself wasn't connecting with people. So I decided to kill it in the end. I typically get a extremely good response rate, like 65-70% open rates, and very, very good, like 10% click through rates. But my open rate on that was like 12 or 13% versus in the 60s or 70s. So you can see that there's a huge disparity between. So I did that. And I also worked a lot on my client work. I do still have a client, big client of mine, and worked a lot on ads and connection issues. So we were having an issue uh, with the connection between Thinkific, which we use for our membership and course hosting, and Stripe. So I was having to deal a lot with Stripe with these two things. The connection between the two, something broke, and I had to fix it. And then we also had an issue because when we first uh, created our membership, we actually were hosting over on Kartra. We were using Kartra at the time, and when we decided to end Kartra, I had to manually import people that had purchased our membership in Kartra over in Stripe. And to this day, if anybody ever wants to cancel, uh, I have to go in, or we have to go in uh, and manually cancel them out. And we have to manually cancel them out there. We have to manually cancel them out in Thinkific. We have to manually cancel them out in ConvertKit because it wasn't set up for them the way that it needed to be set up. And so having to go fix all these issues, and that was a good majority of my day yesterday. Just those two things, that client work and then writing the multi-page pre-sale sites. By the way, if you have any questions during this whole thing, go ahead, throw them in the chat with the word question all in caps first. That way I can see it easy. And I can get all of your questions answered. And I love answering questions, so please go ahead, throw them in the chat whenever you think of one. I'm willing to answer just about anything. So let's get to what we're talking about today. All right, trading. All right, let's just kind of start off with how I got into trading in the first place. So I got into trading just after I got out of real estate investing the first time, right? So I was in real estate investing between the years 2000 and 2007, 2008. Right after that, I really didn't know where I was going with anything. So I knew I wanted to do something from home. And trading was something that got brought up a couple of times. We have if you look at Robert Kiyosaki's book, The Cash Flow Quadrant, there's 4 different quadrants. You have your employee quadrant, your self-employed quadrant, you have your business owner and investor quadrants, right? And the investor quadrant, everybody talks about paper assets, right? As well as real estate, but there's a lot of talk about paper assets. So, I got into looking at the stock market, studying it a little bit, and I found this this website called Tasty Traders. I think is that what it's called, Tasty Traders or Tasty Trade, and they talk a lot about stock options. So the difference between buying stocks and buying stock options is that if I want to go buy 100 shares of Apple, right, that's going to cost me a lot of money and to make a certain amount of profit. But I could actually buy an option for 1/10 of the price of just buying the stock itself and still make the same amount of profit, right? Should everything go the way that I want it to go. And it's by utilizing leverage. And so I got into options, and when I started trading options, I was doing pretty well. Options is very complicated in my opinion, and I'm not an options trading expert by any means, but I was doing it. I was doing pretty well. I was trading live, not just demo trading with paper money, fake money. I was trading with real money. I was doing well, and I at one point I found an ad for a advanced, what I thought was an advanced options trading seminar. So I go to the seminar, and the seminar was just, a huge sales pitch. That's pretty much all it was. But they talked very little bit about options trading, right? They talked a lot about a lot of different stuff, and showing, this person made a gazillion dollars, in a weekend, and this person made a gazillion dollars, in 3 hours, type stuff. But then at one point, literally right before I was gonna get up and walk out, they mentioned something called Forex, right? And I was like, what is that? like what is this forex thing? I had no idea. I had never heard the term before. Uh, and they talked about how that it was trading the foreign exchange market. That's what forex stands for, foreign exchange. And I left. I went home, and this word forex just kept pinging in my head over and over and over. I couldn't sleep. So got up. I started researching it, and I researched it all day long, right? From like the time I woke up all the way through to the next evening, I was just addicted to learning about forex. It seemed much simpler than trading the options like I was trading, and it just kind of fit me. So that's kind of how I got started in trading, and I've been doing trading ever since. Have not stopped. I have slowed down here and there with how much I trade, but I'm always trading, just constantly. I'm always watching the market, and that's kind of what we're going to talk about today. Is trading in the currency market. Now, why do I not like, for those that don't know, I don't trade the stock market anymore. Right? I do not trade stocks. I do not trade options or futures, commodities, anything like that. I only trade the currency market. That is kind of my forte, right? I don't want to split my time and diversify into different markets. One of the reasons that I don't uh, trade the stock market is because, one, it's super easily manipulated, right? Uh, at any given moment, a stock can change course in an instant based off of some key factor, right? Whereas the forex market, it's so large, it's like 10 times larger than the New York Stock Exchange, that it's next to impossible to manipulate the market, the currency market, as it is the stock market. There's also too many stocks to look at, right? You've got thousands of different stocks out there that you could be, doing a trade on, or investing in. And for me, that's just way too many. Like, it's just way too many. So that's one of the reasons that I stick with the currency market, because the currency market, there's only a few currencies that I watch. I watch the U.S. dollar, the euro, the pound, the British pound, the Japanese yen, the Aussie dollar, New Zealand dollar, and the CAD, right, or the Canadian dollar. Sometimes I do watch the Swiss franc as well, but not so much, and I almost never trade it. But that's all I have to watch, right? I don't have to have a list of 50 different stocks to look at every single day. I literally only look at just those currencies, and that's it. There's what, one, two, three, four, five, six, seven. There's 7 different currencies that I watch, maybe 8. If I'm looking at the Swiss franc. Uh, and the thing I like is that number one, the forex market is completely decentralized, which means that unlike trading stocks and futures, there's no stock exchange type centralized exchange for the currency market. Sorry, I'm kind of looking over here at the chats going by, and I will get to the questions that are in the chat. I promise. But in the forex market, there's no single price uh, given at any time for a particular currency, which means that the quotes from different currency dealers can vary, and it doesn't really vary quite a lot, but it does vary. There's no one price. So if you go trade Apple, there's one price, and it's not like that in the currency market because it's not centralized. Now, really quick, let me go into the chat row here real quick, because I did see a couple of questions. Here's one from Salima. What are some red flags to watch out for when it comes to investing in further training for currency trading? So if you mean what are some red flags to watch out for when it comes to people teaching you how to trade in the currency markets, there's too many, unfortunately. Anybody promising anything is a big red flag for me. If I'm watching a video on a currency trader and they say something like, you can make, a living in 30 days, and replace your income in 30 days, or even 60 days, or even a year, right? That's a huge red flag. right? Because you simply don't know, and you don't know where someone is starting from either. You know, they you know, there's a kind of a saying in the forex market that, you know, if you want to make $1 million in currency trading, start with $2 million. Right? So, essentially, that you're going to lose a whole lot of money. You know, people that don't talk about the possibility of losing money is a huge red flag, right? In trading of any sorts, whether it be in the stock market or options or futures or, you know, currencies, whatever, you're going to lose money. It is 100% inevitable, right? There's nobody on the planet that has ever gotten 100% uh, return, 100% uh, correct in picking whatever, whatever it is, right? I win on average roughly about 76% of the time, right? But not 100%. I lose money all the time in the market, right? I would also watch out for anybody saying something like, you know, you want to use 1% uh, of your capital on a particular trade, or 2%. This is what we call the 2% rule, right? And it's hogwash. There's no logical, mathematical, sound reasoning behind picking 1 or 2%, right? It's just someone somewhere came up with, you know, this 2% rule that we call it. You know, if you have, you know, $1,000, you know, account, you know, you have your brokerage account and it has $1,000 in it, use 2% of that on a particular trade. What kind of sound reasoning is that crap? Like, it doesn't work mathematically, right? And you see countless times people utilizing that don't make any money. They lose money consistently because it's not mathematically sound. That's what we call a fixed fractional money management system, and it's not really a money management system at all. I utilize a fixed ratio money management system, and I don't have time to get into that today. But you know, anybody that makes anything sound too good to be true, that does not talk about losing money, that almost always just talks about how you can make money here, how you can make money there, huge red flags going up, huge red flags. And yeah, you know, out of every single person out there teaching, which probably in the neighborhood of tens of thousands of people teaching currency trading, there might be 2 people out there, maybe 3 people at most, that actually know what the heck they're talking about, that actually make money trading. And I used to be one of those people. I was actually at one time I was the top person teaching, uh, and but I don't really do that anymore. So I hope that answered your question. Another question by Salima: have you ever sold put options? Yeah, when I used to sell, when I used to trade options, I used to do puts all the time. Absolutely. Um, Peasant Uprising, always been curious about trading and investing, just never had it, the extra money or know how to do it. Um, yeah, you know, you definitely need money to trade. I always recommend starting off with, you know, at least $2,000 to $2,500, if not 5,000. You know, to really start trading, and this has to be extra money, something that if you lost it all, you know, would not cry yourself to sleep every night, right? And you would still be able to pay your mortgage or your rent, your bills, put food on the table. Too many times, like, I actually had a student that purchased my masterclass course. That, you know, my masterclass course itself, at that time, he purchased it for $2,500, right? And my masterclass wasn't just a course; it was live. I actually went through for 9 weeks with you. Uh, how to trade. And I did not realize when he signed up, because he actually lied in the questionnaire. But because I want to make sure, like, I used to have a questionnaire, I want to make sure that you're not going to go broke, you know, should you lose your money. And he ended up had borrowed the money to get into the masterclass in the first place, and then he wagered all of his savings on trading. And before the 9 weeks was up, he had actually lost it all because he wasn't listening to me, right? And he wagered it all, and he was wagering like 10% per trade, which was insane. No rhyme or reason to do it. He was trying to make a living from it. He quit his job. He wanted to get into trading, and do this without any prior knowledge. And wanted to do things on his own. Thought he knew what he was doing, and lost it all. Lost his apartment, and ended up having to live in his car for a little bit, and then moved in with his mom. So almost a similar story to me, just in a slightly different way, a different route to get there. And you can't do that. You absolutely can't do that. You have to know what you're doing. All right. Warren Buffett said about diversification that, diversification is a protection against ignorance. But if you know what you're doing, it's not really risk per se. It's a calculated risk, right? And you don't want to risk anything, like that. So definitely know what you're doing. Let's see. Good question. This is a really good question from Salima. Would you start with all 7 or 1 when starting? Really, really good question. I would start between 1 and 3, not all 7, right? I'm not going to say just 1, because working with just one currency is not going to give you the opportunity to do any good amount of trading. You may have to wait weeks or even months for a good trade to come up for you to take. There are lots of trades out there. There are trades every minute of every day. But there's not that many good trades. Trades that will actually make you money. I trade, like when I trade, even at my prime, when I'm just like, balls to the wall, I'm just going all out at trading. I might put on 3-4 trades a week, right? And that's it. That is it, right? I might find 300 trades, but those trades aren't good. So I'm only doing, just a couple, right? I've gone weeks without trading because I didn't see anything worthwhile in the market. But that was with all 7, right? So I would pick like 3 and study those currencies. Look at their centralized banks, see what they're doing. What are the interest rates? What is the unemployment rates? What are retail sales? All of that type stuff you're going to want to look at. And really study those currencies. How does the market move in those currencies? And really study them, and just 1 to 3. But I wouldn't go more than that, and I wouldn't just stick with just 1 either. So essentially, what is Forex? Forex is nothing but trading actual money, right? So we work in pairs in currency trading, and I'm going to show you that here. Let me go ahead. Let me move this around. Let me go ahead and share my screen. So here we have, just a typical candlestick chart, right? You'll notice that I don't have any indicators on my chart. I don't utilize indicators, and there are thousands of indicators, literally thousands of indicators out there, and I don't use any. I do it what we call naked charts. And as you see here on my right-hand side, these are what we call currency pairs. So every time you place a trade, you are buying one particular currency and selling another particular currency at the exact same time. So here with the euro dollar, if I'm going long, I would be buying the euro and selling the US dollar, right? If I want to go short, it's the exact opposite. And these are all the different currency pairs that I watch, but you'll notice that there's still only the 7. I have the euro, I have the dollar, I have the JPY stands for the Japanese yen, the Aussie dollar, AUD stands for Aussie dollar, NZD stands for the Kiwi, all right, or the New Zealand dollar, CAD, Canadian dollar, GBP is the British pound sterling, and so forth, right? And we just have different currency, swappings. So here I have the pound CAD. Here I have the euro CAD. Down here I might have the CAD yen, right? So these are just the ones that I watch. Now, ones that I really like, and you can take a screenshot of these currency pairs that I watch. These are the only ones that I watch. I don't watch anything else. The ones that I really, really love are the Aussie dollar and the Kiwi dollar. These two I've made an insane amount of money on. In fact, if I have to say what percentage, probably 90% of all the money that I've made have come from those two currency pairs. I absolutely love them. And yeah, but those are all the ones that I watch. Let me go back to my notes. Now, when we are looking at placing a trade, right? How do we get paid? We get paid in what we call pips, right? A pip is usually the last decimal point in a price quote, right? When you're going to place a trade, let me actually go back here, and you'll see what I mean. Where's my share screen? There we go. All right. Over here on this right-hand side, you'll see like the euro dollar here is 1.1877, right, in this case. That last 7 there is what we call the pip, right? This little tiny number, that would be a pipit, but I'm not even going to get into that now, right? But that is how we make our money. And it's going to really depend on how much money we make by how many pips the currency moves and the lot size that we utilize. Now, we utilize a lot of different lot sizes. The smallest one is typically a nano lot, which is 100 units, a micro, which is 1,000, a mini lot, which is 10,000, and then a standard lot, which is 100,000 units, right? And we do everything in units. When you're looking at analyzing one of these charts, right, you don't just go look at a chart and place a trade, all right, a market order trade. You don't want to do that. You have a lot of research to do. And there are 3 different types of analysis that we want to be doing. The first one is fundamental analysis. Fundamental analysis is looking at what's going on long term in that particular country. So, for the US dollar, I'm going to be looking at non-farm payrolls. I'm going to be looking at the Federal Open Market Committee release. I'm going to be looking at unemployment rates, interest rates, retail sales, all of this type stuff, and trying to look at the broad overall picture, going back months and years of what the market is doing. A lot of this can be looked at in the chart, but I actually tried to dive in and look at different reports that the central banks are putting out. I really, really look at the central banks a lot for that particular country and what they're doing, what they're looking at. And I look at a couple of other key indicators as well to do my fundamental analysis. And I am not going to get into fundamental analysis right now. It is just way too much to go through. If you want to, like some of the things that I look at when I'm looking at fundamental analysis, I look at Forex Factory a lot. This is Forex Factory, and this is the calendar of events, right? So here we can see monetary policy meetings, and anything in red, or I guess this is red and orange, are stuff that is, pretty critical at looking at. Here we have unemployment claims. We have FOMC meeting minutes here. This is German flash manufacturing PMI. Like, these are all things that I would want to look at, right? This is for just this week. If I go to next week, there's monetary policy report hearings, retail sales as well for the Kiwi. Like, these are all, anything in orange and red, I'm going to be wanting to look at, right? So I highly recommend forexfactory.com to look at their calendar. Yeah, it's pretty good. I changed the wrong scene. There we go. The next we have is sentiment, right? Sentiment analysis is trying to understand what the market is kind of feeling right now about a particular currency pair. So let's say, retail sales came out. How does the market feel about that data that just got released? And one of the best places that I go to for looking at and analyzing sentiment is I go to Twitter. All right, Twitter is fantastic. I have a particular Twitter account that I follow certain key people and places to see what's going on. I follow certain hashtags so that I can just go in, see what's going on. And I used to use a uh, company called RandSquawk that was a news feed, right? And this news feed gave me fundamental and sentiment analysis of everything that's going on. Literally, the second something comes out, they're talking about it. But I actually found that I can get the same information just as quick, if not even a slightly bit quicker, over on Twitter, and it was free, right? I was paying hundreds of dollars for RandSquawk and other tools. There's Bloomberg Terminal, Reuters Icon, and so forth. All these different news feeds and squawk boxes. But I found Twitter, honestly, for me, just kind of worked better. Um, and but I want to see with sentiment analysis. I just want to see what the market's feeling about a particular currency before I go and move in. The next is technical analysis. So if I go back to my charts here, right, and I'm looking at this chart, right, this is what a typical chart might look like in the currency markets, right? And I'm looking for different things. I'm looking for support and resistance levels. Support levels could be something like, right here, we see how the market is just bouncing off of this area multiple times. We have multiple times here. We have, multiple times right here, multiple times right here. And, I bet you if I go back here a little bit, we can see that, it's, given support elsewhere. Resistance, on the other hand, is the kind of the opposite, right? So if I move, something up here, all right, let me find a good resistance level here, right? So, right about here, we can see that, the market moves up and just bounces off of this area without, truly breaking through. We may have like what we call a false break right here. Let me move in here. We may have a little false break here, but roughly it just pretty much stayed right here underneath this area. That's what we call resistance, right? It's resisting the ability to go through that market, right? To go higher, right? It just keeps bouncing. It's trying, and then of course we see it just fall off the map, right? These are just little things and things that I look at, right? And when I'm dealing with technical analysis. But that's technical analysis, just getting in there, looking at the actual chart, what everything is doing, maybe utilizing indicators, maybe not utilizing indicators. I don't use them, but seeing what the chart actually shows. Now, this is 99% of what people do is technical analysis. Technical analysis is amazing. But in my opinion, it's like a one-leg stool, right? A one-leg stool, you can kind of sit on it, but if you kind of move one way or another, it's going to fall, right? Or break. You need at least 3 legs to make a really good stool, right? And those 3 legs are the fundamental analysis, sentiment analysis, and your technical analysis. You can't just have one. There are people that trade just based off of fundamental analysis, and they don't do as good as people that will look at all 3. Then you'll have people that just do technical analysis. Again, don't do as well as people with all 3. If you want to do any type of trading, you have to think of it like a business owner. And I have to think about it like I need to know everything I possibly can about what I'm doing, right? So if I'm trading the US dollar, dollar index, whatever, I have to know as much as I can about it. Not just look at a chart and go, oh, well, it's kind of hitting this resistance level, I'm going to go place a trade. It doesn't work that way, right? You will fail more than you will succeed. And, if you use leverage at all with your trading, you can lose a lot of money. Leverage is a good thing and a bad thing. Leverage is like, when I go to place a trade and I'm doing something like a standard lot or something like that, I'm going to be putting a little bit of money in, and my broker fronts me the rest of the money so that I can utilize leverage. But if you don't, and if I use leverage correctly, I can make a good amount of money. If I use it wrong, I can lose a lot of money, right? And I have lost a lot of money before. I've lost so much money, it's literally made me run to the bathroom and throw up or be on the verge of throwing up. Because I didn't utilize leverage correctly, right? If you don't know what you're doing, don't do it. Take it from me. I'm an example of what not to do, honestly. Even though I've made a lot of money in it, I've also lost a lot of money trading and made a lot more money than what I've lost, but still, I have had some real big doozies. In when was it? August. Yeah, it was this month, August 2015. In August 2015, I lost 19 trades in a row. 19 trades in a row. Do you know the statistics of losing 19 trades in a row is? It's astronomical. 2, 3, 5 trades in a row? Sure. 19 is insane, right? I lost a lot of money during during this period of time, and like I was gonna swear off trading. I was like, I can't do this, and I was getting emotional. I was placing emotional trades, and you can't be emotional when you trade. You have to be very logical. You have to have a particular criteria, what we call a trading plan. This is like a business plan for trading. My trading plan currently is like 42 pages long, right? And it tells me everything that I need to do and what to do if something happens. So it's an if this then that type framework for a lot of it. If this happens in the market, then I'm going to do this, and so forth. And everything that I've ever been through that I want to learn from, I put it into my records. Okay, this is what I learned, and this is what to do next time that comes up. What to do. What are you going to do when a black swan event happens, right? When something astronomical happens in the market, like what happened with the Swiss franc years ago, what are you going to do should an event like that happen and you have open trades, right? What are you going to do about that? And you definitely have to have a trading plan and utilize that trading plan. And back in August 2015, I had started with my trading plan, and I got so frustrated and so emotional about it. Metaphorically speaking, I threw it away, right? I was like, forget this. And I was revenge trading. And I was just trying to make up that money that I was losing by placing really dumb trades. I see this, I'm gonna place the trade, and I wasn't following my trading plan. And after a while, like 2 weeks later, pretty much after my trading was really going downhill, I was staring out the window, and my wife comes up behind me, and she's like rubbing my back, telling me it's gonna be okay, and she asked me the ultimate question: was I following my trading plan? And I thought about it, and I was like, no, I'm not. And like in my head, I have her whacking the back of my head. But I don't know if that was just a visualization or actually happened. But at that point, I was like, I need to follow my trading plan. And so I started following my trading plan. I lost the first couple of trades with following my trading plan, but then I won one. And I was so ecstatic. My streak was over. 19 trades. That's all I had lost. And in the 2 weeks following that first win, because I stuck with my trading plan, I made more money than I had lost in those 19 trades prior. So I made all my money back plus a little bit more, right? You have to have a plan. You have to trade that plan. And you also have to have a plan that works, right? I know I'm not sticking with my notes here. I'm just kind of spitballing this stuff. I'm very passionate about trading. And I absolutely love trading. So I'm just kind of going off topic here. But you have to know that your plan works, right? That's a big thing. A lot of people out there are trading plans that they find on a forum somewhere, on a Forex forum, and they they trade it without ever realizing that that plan doesn't work in the first place, right? Uh, and you'll have a lot of people like in the forum, they're like, oh, this is what I'm doing. And you'll have a lot of other people saying, oh, yeah, I use this too. It works great and everything. But in reality, it doesn't work at all, right? If you put two and two together, right? If you can actually look at it scientifically, back test it, meaning look at all the trades that you could have done in the past and see if it works, most of the time doesn't work at all, right? There are a lot of different systems out there that do work, right? The particular system that I utilize is what we call harmonic pattern trading, right? I learned harmonic pattern trading from Scott Carney, who is the creator of harmonic pattern trading. And I'll show you what I mean here, what I mean by harmonic patterns, right? So here we have a couple of trades here, as you can see. Hold on. There you go. I got to scale out here and see what's going on. So here we have some trades. Let me move in. All right, and you're going to see here that pretty much what you're looking at is an M shape, right? Over here, you're going to see kind of a W shape, right? These are patterns that we call either Gartley patterns or bat patterns. They're literally the only two patterns that I trade. Gartley patterns and bat patterns. There is a particular pattern that I found, which is called a karma pattern. But like I only teach that in my masterclass course. And it's also very rare that I actually utilize it because there are so many factors that come into play when I'm looking at the trade, and it has to be perfect in order for me to take it. So here this trade was, right? I'm looking at this trade and I see this setup here, and I place this trade, right? You'll see here that this is what is said K9, right? K9 simply is just a measurement of a checklist. So I go through a particular checklist for analyzing the trade, and I score it based off of that checklist. And anything over an 8, I can take, right? And so this was a 9, so of course I took the trade, and we can see that my goal here. Where's my tools here? Give me 1 second. Nope, that's not what I want. Where's my lines? Aha, arrows. All right, so I wanted it to go in this direction, all right, which it did. All right, we can see that right here at the ending of the pattern, it starts to move up. That's exactly what I want, right? And it came from analyzing that trade. But essentially what I'm doing, the harmonic patterns are patterns that move in the market that are in relationship to what we call Fibonacci retracements. So for those that don't know, Fibonacci was a great mathematician, and he came up with certain ratios that are found in just about everything, from a seashell to the galaxy to music to everything. Fibonacci is everywhere. And I utilize Fibonacci retracement. So when I'm looking at this pattern, I see, a leg really move up, what we call an impulse leg, and a retracement. At that point, I'm going to grab my Fibonacci retracement tool, and I'm going to measure this, right? And we see that as this market comes back down, it hits a ratio called the 61.8% retracement, right? Or the golden mean retracement. That's one of the things that I look for, right? And as it continues to move, I continue to analyze that pattern. And when I see that it's going to make an entry, right, I put on what we call limit order. I don't ever do a market order. A market order is you're going to get in at whatever price that market is at that time, the moment that you place a trade. What I end up doing is I place a limit order. So if I want to place a trade here, let me move some stuff around here. All right, if I want to place a trade here, I want to buy this, right, because I want it to go long, right? A market order is going to place it at whatever the market is currently, right? And I could lose money that way. I don't like doing that. What I do is I place a limit order, and I put the exact price that I want to get in at, and I put a stop and a take profit where I want to make money and where I want to get out of the market. and where if it goes against me, where I want to get out of the market. And I do all of that here. This is not what I utilize for my trades, but this is free. You can go to tradingview.com and explore the market. You can do paper trading. You can actually do live trading with TradingView as well. I don't. I utilize a different platform. I utilize Interactive Brokers, but what I'm saying here is I want everything to be consistent, right? So I want to get in at the exact price that I want. I want to get out exactly where I want, and if it goes against me, I have to make sure that I get out at a certain price so that I don't keep losing money, right? Here's another thing as well. If you're not trading with a stop loss, or a stop loss is, a point where, let me draw some lines out here, right? First, let me get rid of this, right? So this is going to be the point, and I'm going to make this blue, right? This is the point where I want to get into the market, right? And I'm going to create a new line here, right? And I'm going to say this point here, and I'm going to make this green. Where's the green? I don't even know what a green looks like. Is this green? Or is this green? I don't know. Well, I'll just say that. It may be blue, red for all I know. But we're going to say that this is the point where I want to get out of the market and take money, take profit from that, right? So I'm hoping that the market moves in that direction. Where's my arrows? No, that's not the arrows that I want. Nope. Where's my arrows? All right, so I get in here, and I'm hoping that it moves up to this line. That's what I want to happen, right? But if it doesn't go that way, if it starts to go against me, right? And where's that tool again? All right, if it starts to go against me for whatever reason, I have to have a point where below this line, hold on. Yeah, that was right. Style, and I'm going to make this, is this red? I think that's red. All right. Where if it hits this point, it's going to take me out of the market. So I don't just continue to lose money. And you would be surprised with how many gurus out there will tell you not to play with a stop loss, right? And people out there actually doing that, listening to that. And it's absolutely idiotic, right? If you're going to place a trade, if you don't even want to put a take profit point out and you just want to let it ride, always have a stop loss in place from the second that you take that trade, right? It should be done at the exact same time, because I've literally done this where I've placed the order, the limit order, forgot to put a stop loss in, and before I could place that stop loss, I lost a lot more than I would have had I placed that stop loss in the first place. I literally use a checklist for everything. Anytime I get into the market, I just utilize my checklist so that I don't forget anything, right? So that's pretty much how I trade. I know I'm now starting to go over. If you have any questions, go ahead, throw them in the chat, and I'll try to answer them. We are kind of getting past time here, but I hope that I've provided some amount of value here. Let's see. Question from Salima. Salima's asking some really good questions. Thank you. How many hours a day or week would you spend trading? To be honest, I spend on average about 3 hours a week, maybe. I used to be the type of person where I would sit all day long in front of my charts. And I had multiple monitors set up, right? Like if I had, 12 monitors, that was great. The more monitors, the better. I don't do that. I literally only have one monitor now. And through the rest of the shorts, because I just simply don't need it. It's too overwhelming. But yeah, right now I spend about 3 hours a day. When you're just starting off, you probably want to spend an hour or two a day looking at the market, trying to understand the market better. A good resource for learning how to how the market works and everything is a website called Baby Pips. Let me go ahead and bring that up here. So this right here is baby pips. And here you can see education, right here at the top. And this is how to trade Forex, right? Now, one thing I want to recommend, don't ever go into the forums, all right? Don't ever go into the forums. And also here on the trading platform, right? Let me move some things out of the way, right? There are chat groups. Where are they? All this is new because I don't use this, so I don't know. Nope, that's not it. Nope, those are just ideas. Yeah, okay. So here we have, in the Forex market, people talking a lot about, things. This is very similar to a forum. Don't get in here. 99% of the people here are losing money, right? 99% of the people over here in the forums are losing money and have no idea what they are doing, right? But Baby Pips does have pretty good basic level education, right? So if you want to know what a pip is, they've got good information. If you want to know about the different players in the market, they've got pretty good information, and so forth. So I actually have a course which is called the Ultimate Forex Trading Masterclass course here, right? And I go through Forex Fundamentals 101, structural analysis. This is the masterclass. This masterclass, all these 9 sessions, have roughly 50 hours of education here. All of this is all education. And then I have a backtesting course so that you make sure that you know what it is that you're looking at. And the way that I train my traders is to think, right? Not to rely on any one thing, but to be able to think logically and critically about everything that they're doing. Don't take my word for it. Don't take anybody's word for it. Test it, and that's what the backtesting course is all about. Maybe I was considering in the future, maybe even before LIDA is up, do a second live stream on trading, maybe go a little bit more in depth on a few key topics, and then possibly even give my course away. So if you want to go and purchase my course right now, it's $2,000, right? And when I first sold just the masterclass course, when I first sold it, it was $5,000, and eventually I brought it, down in increments down to $2,000. But I sold countless courses at $5,000, and it was live, and at $2,000 it was pre-recorded like it is now. But the Forex Fundamentals 101 course, that was selling for like $500. The structural analysis course was about $200. Backtesting course about $300, and then of course the masterclass anywhere between $2,000 and $5,000. And now I put it up there for people to get, and it's $2,000. But I think the next time I do this, I'm going to actually give one person access to the whole thing. All right, for life. You will get access to everything so that you can learn how to trade, if that's what you want to do. I'm not going to get into that now though, but my wireless mouse is about to die. So we'll see how that works out. Let's see. Salima is asking, what percentage investment would you recommend per trade max? That's a whole other topic that I really need to get into, and that's on the money management system that I utilize, because I can't just say a percentage. A percentage doesn't really work, right? If you say 1% or 0.5% or 1/4% or whatever percent, that's not mathematically sound, right? You could take, like, there's this 2% rule. And if I took, there's a book by, what was that book even called? I can't think of it, but I'll figure it out and let you all know tomorrow. Or I'll put it out over on Twitter. The book, but there's a book out there that talked about the differences between fixed fractional and fixed ratio money management. And fixed fractional money management, or the 1% or 2% rule that people talk about, the percentage per trade, like you're asking, they analyze that, and they took all of these trades. Let's say it was 100 trades for the year, right? And the person started with $10,000, right? They turned that $10,000 into about $33,000 that year, right? That's amazing. That's fantastic. But they went back and took the exact same trades, right? The exact same trades, and just applied the money management system that I utilize, which is called fixed ratio money management system. Found that $10,000, instead of becoming like $33,000 or whatever it was, would have been like $150,000, right? It's because it's mathematically sound, right? You have to do exactly what the spreadsheet says to do. And if you don't stick with that spreadsheet and you don't utilize what's called a delta, there's a lot of other stuff to talk about, that you're going to lose money consistently, guaranteed. But you'll make more money with a particular type of money management system than this whole percentage rule. So ask you what percentage investment would you recommend per trade max? I can't give you a percentage because it's faulty in itself. Pheasant Uprising saying just saw the dollar signs. Let me say this: 99% of you watching this, and let's say all of you get into trading, 99% of you watching this are going to lose money. I'll just be outright, upfront with you. So if you're able to keep emotions in check and keep them out of your trading, you have a good trading plan that works through back testing, forward testing, and live trading, then yeah, you have the potential to make money. I'm not going to say you're going to make any money at all, but you have a much greater potential to make money, right? But 99% of you are going to lose money. That's just the reality of things. So you're seeing dollar signs. Yes, you can make money, but you can lose just as much money, if not more. I've literally seen people, hundreds of thousands of dollars in debt because they over leveraged themselves. Let's see. I already answered that. Question: I have my pension through the city, but also pay into a deferred comp plan. Is there anything else I can do aside from those that I'm paying into? I think there's a lot of things that you can do, honestly. Like, I don't like pension plans. I don't like 401ks or anything like that. I like to utilize my money myself, and self-direct it, versus have someone else play with my money. Yeah, there are other things that you can do. Look into trading. You utilize that money if you can, to trade with, or put it into your online businesses. Question: what platform do you use for your trades? I use a particular platform that is with Interactive Brokers, and I don't actually know anymore if you can, for normal people to utilize Interactive Brokers here in America. In the U.S., I believe that you have to have a account of like $1 million or more. I could be wrong. There was a thing a while ago that you had to have that, but I've been with them so long, I don't even remember. I do not recommend trading with TD Ameritrade, and I'm just going to be point blank. I've literally lost money with them, literally out in the stratosphere somewhere. No idea where it went. And that was simply moving money from my TD Ameritrade account to my bank account. Up and disappeared. Do you recommend including your home currency when trading? No, not at all. Biggest mistakes you made when started trading? Good question. Good question. I would say getting emotional about trading, for one, and not utilizing a really good trading plan. Those are my top two. If you have a good trading plan and you keep your emotions in check, you cannot be emotional in trading at all. If you are, you're going to put on some really dumb trades. You're going to get into trades that you should not have gotten into. So, yeah. Let's see. Consult the blind guy. By the sounds of it, I won't be doing any trading unless I can become free of disability and already have a high income stream or wealthy, you don't need a lot of money to start trading, man. You can literally, create a trading account for $50 nowadays. I just recommend having, $2,000 to $5,000 worth of capital that you can't afford to lose. All right, because more often than not, you're gonna lose it. Just point blank. All right, I don't want to be that person that wants to kick you down or anything like that. But the reality of it is 99% of traders don't make it. Right? They're stupid. They put on stupid trades. Uh, they don't stick with a trading plan. They think that they know the market. Like, I actually talked with a guy. I went to a meetup group, and this guy who ran it was the guru of the group, and people like really looked up to him. And I asked, I was like, "What trading plan do you use to do your trading?" Is it, "Oh, I don't use a trading plan. I've been in the market for a couple of years now. I know the market. I know where it's going to move. I can tell you that it's going to, go high, and I place my trade in. I'm always right." And dude, I just literally walked out. I was like, this guy is a fool. He has no idea what he's doing, and everybody listening to him, is going to lose money as well because they're listening to him. Let's see. Can you recommend any books to further research trading? I don't read too many trading books. I have in the past. I really can't. If you go to if you go over to thecashflowarmy.com, join my community, send me a private message, or even put it in the group itself. I will go ahead, look at some of the books that I have read in the past because they're just not coming to my head, and I'll go ahead and answer it there. So yeah, just go to thecashflowarmy.com and I'll go ahead and do that. Let's see. My wife in the house. How's it going, sweetie? Let's see. Salima, always with the good questions. If you were looking to grow the profits from your biz, would you invest in real estate first, forex trades, or something else like another biz? Uh, this is what I would do personally, right? If I'm getting profits from my business, I'm gonna just roll that back into my business. Simple as that. Like that. That's just what I'm gonna do personally. I take very little to put into my trades, and that's usually stuff that comes into like I actually did a video. I did a couple of videos on money management, but during this live stream in August, I did a video where I talked about my money management system, and the business profit is completely separate than the money that I take to put into trading. I utilize the money that comes into my personal area, a percentage of that for my trading. But any business profits, I would roll right back into my business for sure. Let's see. Let's see. Vision 870, practicing on taking 1 to 2% a day with day trading. Any thoughts? What do you mean by you're putting on like 1 to 2% per day, like 1% of your account per trade per day, or you want to make a 1 or 2% profit per day? All right, because they are different. I would not put any amount of financial goal or percentage goal at all. As far as a goal goes, that's kind of the wrong way to look at goals when trading. You don't ever want to put a monetary goal or a percentage goal at all for trading, because think about this. If my goal for this week is to make 2%, 3% on my money this week, and I don't hit that, what am I going to start doing next week, right? I'm going to start placing really dumb trades to try and make that up, right? If I say, I want to make $20 per day, That's it. Just $20 per day. And today I don't do it. Then, okay, maybe not such a big thing. Tomorrow, maybe I don't make it. At some point, I don't make that $20 for a couple of days. Now I'm going to start revenge trading, right? I have to make that up. Well, I only made $18 here or $10 here, or I lost $3 on this day. I've got to make that up, right? So it's a wrong way to look at things. My goals, like when I set goals, is my goal is to make sure that I flawlessly execute my trade by utilizing my checklist, right? My goal is to follow my trading plan to the letter, right? Those are much better goals than a monetary or percentage type goal, right? Does that make sense? My goal might be, to every day at 8 o'clock in the morning, I'm going to come for an hour or two a day, and I'm going to sit here and just watch the market. Just watch it move, right? That's a goal. And that's a much better goal than saying, oh, I'm going to put a percentage or a dollar amount on something. Hope that makes sense. Yeah, making 1 to 2% profit. Don't do that, dude. Seriously. I promise you're going to regret it. There are so many people that put on these goals and they end up losing money because of their goals, right? You have to have the right type of goal than a percentage base or a monetary base. So, all right, guys. Well, I have gone well over my time. Thank you all for being here with me today. I really appreciate you being here. If you want to ask more questions, you can go over to thecashflowarmy.com and join my free community. It is free, and you can ask me pretty much anything you want there. That's where I spend a lot of my time. That's where you will find me. And for everybody else right now, I encourage you to go over to check out my friend Pat Flynn at patflynn.com/the-income-stream. Jarvis is going crazy. And he provides epic value. He's always a pleasure to watch, and always learning something from him. And I encourage you to do the same. So that's where I will be, and we'll catch you all tomorrow, guys. Same time, same place. I will be here 9:30 a.m. Eastern Standard Time, 6:30 Pacific. So until then, guys, take care. Peace.